Hey, welcome back to the channel. Finding the right stocks to buy and hold for the long term can be challenging, especially with the ever-changing world and economic landscape. But here's the thing, one of the best strategies for long-term investing is to focus on companies that pay dividends, especially those with strong market positions in stable or growing industries. Dividends are not just extra cash. They are a strong indicator of a company's financial health and have contributed around 40% of the S&P's 500 total returns over the past 9 decades. So here are my 7 magnificent dividend-paying stocks that could be your ticket to long-term gains. Procter & Gamble, PG. Procter & Gamble is the leading producer of household consumer products. It owns well-known brands like Gillette, Pampers, and Tide. Procter & Gamble's focus on product innovation, enhanced advertising, and improved productivity is expected to drive long-term earnings growth. Innovative products like Dawn Power Wash are gaining market share and allowing the company to raise prices, helping to counter inflationary pressures. Despite rising component costs, Procter & Gamble has successfully expanded its profit margins and increased its dividend in fiscal year 2024. PG stock gets a buy rating with a target price of $190 compared to its closing price of $175.59 on September 6. JP Morgan Chase & Company, JPM. JP Morgan is one of the world's largest banks, managing around $3.5 trillion in assets. During the 2023 U.S. regional bank crisis, JP Morgan made a strategic move by acquiring the failed First Republic Bank after it was seized by the FDIC. This acquisition boosted JP Morgan's impressive lending growth and added a solid portfolio of loans and deposits to its existing high net worth client base. JPM stock deserves a buy rating with a target price of $235 compared to its closing price of $212.46 on September 6. Home Depot Inc., HD. Home Depot is the largest home improvement retailer in North America. Many potential consumers are holding off on major remodeling projects, waiting for interest rates to drop. Around 75% of U.S. homeowners have mortgage rates below 4.5%, making them more likely to upgrade their homes rather than buy new ones. With around 70% of U.S. homes being at least 25 years old and needing upgrades or repairs, Home Depot is well positioned to benefit from this trend. Home Depot stock gets a buy rating with a price target of $400 compared to its September 6 close of $360.05. The next company is Johnson & Johnson, J&J. J&J is a leading global player in pharmaceuticals, medical devices, and consumer healthcare products. Johnson & Johnson has a strong drug pipeline, significant growth opportunities, and a solid history of successful acquisitions and capital returns. J&J's upcoming drug launches and potential regulatory approvals are expected to keep its pharmaceutical and medtech segment competitive. J&J's management is dedicated to expanding these segments through robust R&D, external acquisitions, and strong operational execution. J&J stock gets a buy rating with a target price of $180 compared to its September 9 close of $164.38. The next company is Merck & Company Inc., MRK. Merck is one of the largest pharmaceutical companies in the world. It is known for its top products like Keytruda, the cancer drug, and Gardasil, the HPV vaccine. The company is consistently expanding its portfolio with new regulatory approvals, particularly for Keytruda, which accounted for about 45% of the company's revenue in the fourth quarter of 2024. Recently, the FDA approved Merck's Capvaxive vaccine for invasive pneumococcal disease and pneumonia, while the Department of Agriculture approved another of its drugs for canine flu. Merck stock gets a buy rating with a target price of $140 compared to its recent closing price of $117.84 on September 6. The next stock on the list is Cisco Systems Inc. CSCO. Cisco Systems is a leading producer of networking, cloud, and cybersecurity hardware and software solutions. The company is currently facing some near-term challenges as customers delay orders and exercise caution due to the high interest rate environment. Despite this, however, Cisco has a proven track record of managing through tough economic conditions and is well positioned to weather the current downturns. Its business-to-business model offers some protection from direct consumer exposure, helping it mitigate the impact of the broader economic weakness. Cisco gets a buy rating with a $70 price target compared to its recent closing price of $48.50 on September 6. The final company on the Magnificent Seven list, Chevron Corp. CVX. Chevron is a leading global oil company involved in exploration, production, refining, marketing, and petrochemical businesses. Chevron's management deserves credit for their strong history of returning capital to shareholders through dividend and share buybacks, even during tough times in the oil market. Chevron's recent acquisitions and new project launches position the company for future earnings and revenue growth. Chevron Corp stock gets a buy rating with a $211 price target compared to its recent closing price of $138.56 on September 6. Now that you know my Magnificent 7 dividend stocks to buy for the long term, you should check out my video on 5 under-the-radar AI stocks right here. Link also in the description. Don't forget to like, share, and subscribe to Financially Well. Share your thoughts in the comments below. And until next time, stay financially savvy. See you in the next video.